Hey everyone, welcome back to Corporate Decoder. We're about to dive into a filing that might make you choke on your, well, you'll see. Today we're breaking down a current report filed by American Rebel Holdings Inc. What we've got here is a filing that tells us about a new deal, specifically an agreement to buy into another company. This is a pretty standard thing for companies to do, but like always, the devil is in the details. So what happened here is American Rebel Holdings, or the company as they call themselves here, made a deal on September 2nd, 2025. They agreed to buy a piece of a company called Sedona Enterprises LLC, which also goes by Schmitty's. The Schmitty's is in the business of making and selling smokeless products that don't have tobacco or nicotine. Think of it as a healthier alternative for people who like that kind of thing. The deal itself is pretty interesting. American Rebel is paying for this 1901% ownership in Schmitty's by issuing shares of its own common stock and some pre-funded warrants. They're giving them 183 cent per 33 shares, 153,000 shares of common stock and a pre-funded warrant. That allows Schmitty's to buy 1,103,515 LAN. That allows Schmitty's to buy 1,183,001 cent per share. Now to figure out the value of this deal, they've put a price on their stock. They're saying their common stock is worth 1.25 per share, and the pre-funded warrant is worth 124 fen per share. This puts the whole package at about $2 million. For that money, American Rebel is getting a nearly 20% stake in Schmitty's. It's important to note that these shares are being issued in a way that's not registered with the official securities regulators. They're counting on an exemption that applies when a company sells securities directly to sophisticated investors who can assess the risks themselves. Think of it as a private placement type of deal. Also, in this deal, American Rebel has agreed to file a registration statement with the SEC fairly soon to make sure these shares can be traded publicly later on. They've also included a clause that limits Schmitty's ownership in American Rebel's total stock. This is often done to avoid certain 5% of American Rebel's total stock. This is often done to avoid certain regulatory requirements. The agreement also has some important promises about Schmitty's products, making sure they use food-grade ingredients and follow all health and safety rules, including those from the FDA. Schmitty's itself is described as a Washington-based maker and seller of premium non-tobacco, non-nicotine oral products. They're really pushing this idea of being a healthier, more satisfying alternative for adult consumers who want to avoid tobacco and nicotine. They're even looking to develop new products that might get reviewed by the FDA. Their sales channels seem pretty solid too, with a strong direct-to-consumer business, adoption by 7-Eleven, and good sales performance at other retail stores. This section just confirms what we already talked about in item 1.01. It reiterates that American Rebel authorized the issuance of these shares and warrants on August 19th of 2025, and that the deal will be done under that private placement exemption we mentioned. They're relying on Section 4 Exio 2 of the Securities Act, which is for transactions not involving a public offering. The buyers are described as accredited investors, meaning they're considered financially sophisticated enough to handle this type of investment. Finally, in the exhibit section, we see that the actual purchase agreement is filed as Exhibit 10. This is where you'd find all the nitty-gritty legal terms and conditions of the deal. Now looking at the bigger picture of American Rebel Holdings, this filing tells us they are actively pursuing growth by acquiring minority stakes in companies that offer alternative products. Schmitty's, with its focus on non-tobacco, non-nicotine oral products and a growing sales presence, seems like a strategic fit. The valuation of 125 for other operational needs or fuel issuing stock is a more attractive way to fund acquisitions. However, there are always risks. The reliance on the unregistered securities exemption means these shares aren't easily traded for the current holders, while American Rebel plans to register them. Delays or issues with that process could arise. Also, the 4.99% ownership blocker, while a smart move to avoid certain disclosure thresholds, can sometimes indicate a company is trying to manage its public float and ownership structure carefully. The success of this investment will hinge on Schmitty's ability to continue its growth trajectory and navigate the regulatory landscape, especially with potential FDA reviews. American Rebel's strategy here seems to be about diversifying its portfolio and tapping into the growing market for healthier alternatives, but the long-term success will depend on how well they integrate these new ventures and how the market responds to these types of products Alright, that's our breakdown of American Rebel Holdings' latest filing. What's your take on this acquisition and what it means for the company's future? Do you think this move into smokeless alternatives is a smart bet? Drop your thoughts in the comments below. If this analysis was valuable, please hit that like button. It really helps us out. And subscribe to Corporate Decoder for more straight up insights from the world of business. Don't forget to join our Discord community, linked in the description below, where we discuss these filings and more. Thanks for watching, and we'll see you next time.